Alright guys, welcome back to another video. Today we are going over market structure shifts versus liquidity sweeps, as well as break-in structure versus liquidity sweeps. So the first thing you have to understand is what displacement is. Now displacement is something that I see most 2022 ICT mentorship students miss or forget about when looking for a reversal or a retracement play, and there is not necessarily a definition for it, but it is open to interpretation. So here is my interpretation of displacement. Essentially what you're looking for is aggressive, fast-moving, big or full-bodied candles that appear to have some form of momentum or speed behind them. So these candles here are what I would consider displacement, right? They moved quick and aggressive below this low. Typically, it's in the form of multiple candles, but it can be a single candle depending on what time frame you're looking at. Displacement tends to also have some form of inefficiency or fair value gap within them, and I don't consider displacement unless there's a fair value gap, in all honesty. So now that you understand what displacement is, let's get right into what a break of structure is. So a break in structure is identified by having a successful displacement below the old low or high. In this case, we're going to look at the bearish scenario because that's the way that I have drawn them out here. Now, this shows that the algorithm may be drawing to a lower PD array or target. Because we've seen this displacement, we are seeing a willingness to go lower, and the algorithm is continuing to price lower. You can also see in this displacement, we have fair value gaps. Fair value gap that broke this low, as well as a small fair value gap up here, just confirming that we are in fact seeing displacement. And the last thing that I wanted to point out is we saw a candle close below the old swing low, and that means not too much. Honestly, the candle close is just an additional confirmation. We don't want to use just a candle close to determine a break in structure or a liquidity sweep. However, it should be used as a confluence with these other indicators or ideas. So now that we understand a break in structure, let's take a look at a liquidity sweep. Okay, so now that we have our liquidity sweep model on the left here, we can see that this is failure to displace. Okay, so a liquidity sweep has failure to displace below the old low or high if it's a bullish scenario. And what this essentially shows is the algorithm may be unwilling to go lower and ultimately could be reaching for a higher PD array or a higher form of liquidity in the form of equal highs or relative equal highs. You'll also note that there is no fair value gaps in this push down, ultimately showing that this is once again not displacement. And of course, we don't have a close below this low. However, we still could, and it could still be a liquidity sweep. Okay, so now that you understand breaks in structure and liquidity sweeps a little bit better, let's get into the difference between a break in structure and a market structure shift, as well as a liquidity sweep in a bigger picture format here. So as you can see here, we do have our low, our high, and our lower low that actually creates a fair value gap here, as well as up here. Just like in the other image, this is pretty much identical, except we end up continuing down lower and breaking this swing low here with displacement and fair value gaps. So this should be telling us that we could be seeing a continuation lower because we did displace below this low. But we did end up coming up above this swing high. So what I have to remind you is when we're looking at this price action here, for example, this candle was at one point all the way up here. And had it closed here, I would have considered that displacement, and then I'd be looking for a fair value gap to form and ultimately to enter off that fair value gap using this as an internal liquidity sweep. And hopefully we swept a higher time frame liquidity level over here. But we did end up, in this example, wicking all the way back down, creating an internal liquidity sweep here, right? So we ended up pushing up and failing to displace above this high. We failed to displace, and ultimately that led to us pushing down lower again. And what did we have here? Failure to displace lower. Although we had this close below the low, like I mentioned earlier, we can see this close below the low, and it not be a break in structure, we did fail to displace. Where's the fair value gap here? There's not a single fair value gap here, and this is not ultimately as aggressive as what this is. This is displacement, guys. This is your displacement above an old high, ultimately shifting market structure and telling you that it's time to potentially look for a reversal play or a bullish or long opportunity to a higher time frame PD array or a higher time frame liquidity pool. So let me just remind you here, you have fair value gaps, you have an aggressive move up, and you also have a close below this high, further confirming that we are going higher here. So now that we understand the difference between those on a basic level, let's get into the charts and look at some real-time examples. Alright, so now that we're taking a look at this live price action or this real-time data, these candlesticks off of ES1, this is the continuous ES contract. I don't necessarily trade using this chart, but I do my annotations on here for video's sake because there's just tons of data. I do trade off of the actual contract months themselves, but this is a great spot to backtest and try some things out. So without further ado, let's get into that and let's take a look at failure to displace and displacement and how to identify market structure shifts, breaks of structure, as well as liquidity sweeps in real-time price action. So the first thing here that I'm just going to take a look at is our swing high and swing low. And these are the two that we have on our chart. So let's see what happens. Failing to displace below the swing low, what can we expect? The swing high to be taken, or at the very least, a retracement into the range. So up into this EQ here, and we displace higher. So now we're definitely a little bit biased to the upside here. And now we've created a new swing low, but we have also failed to displace this internal swing high. So we are a bit neutral, but I still like the overarching parent range is to reach higher here. So let's see. One more fail to displace below would be nice. And actually there it is right there. I don't know if you guys can see that, but we did wick below this low here, failing to displace below that. And one more candle close will probably send us up would be my anticipation, or at the very least make this a swing low. Yeah, there we go. So now we've created this as a swing low. And if you guys are a little bit confused, as you can see, this is lower, so this now becomes our swing low. And our internal swing high is here, which I expect price to be ran to because we failed to displace below the low. So I'm expecting this to act as liquidity sweep and this to act as our target. And there it goes, but we are failing to displace above this, but this is a big displacement candle. So we're going to give this one more leg if it wants to push up. That's not surprising here. Yeah, and there it goes. So as you can see here, although we wicked above this candle and we didn't close above this candle's wick or this swing high here, we did have a big displacement candle, so we weren't about to fade that. We wanted to see if there was continuation behind that, and we definitely saw it there. Little power of 3 entry there was probably nice, but we're not going to get into that or any other PD arrays. That's for different types of videos, and if you utilize that information with what I'm showing you here, as well as failure to displace and displacement, you're going to have great success in the markets. But let's get further into this. So as you can see here, we're displacing above, breaking structure here for sure. And just to kind of sell this point home here, this is your liquidity sweep. I know it's hard to see on this time frame here, but I can assure you we did sweep this liquidity. As you can see, this is a little bit lower than this low. So we did sweep that, ended up breaking structure to the upside. And ultimately, we want to see one more candle here because we're seeing big displacement. You got that close above, extra confirmation. And we have these untapped highs over here that I think are probably going to want to be taken. And we're kind of failing to displace, let's see, above this high maybe. Yeah, we're failing to displace above this high. So we're going to mark out our swing low, which is this guy here. And we're also going to take premium and discount of this range. So we're at least expecting a pullback into here if we're wanting higher prices to maybe this liquidity level or this one here, for example. It's actually interesting. That was swept, so it would be looking at like this one maybe. But liquidity levels in terms of drawn liquidity, buy side and sell side, we'll get into that a little bit later in a different video. But essentially here, failing to displace above this high, we're looking for at least equilibrium. That would be ideal here. Yeah, there's equilibrium into discount to raise. And now we're failing to displace this low. Right, so this is a big failure to displace. And if we can see one little displacement up, we're definitely going to be looking for this high here as well as this high here in the form of relative equal highs. So as you can see, not really displacement up, but this failure to displace has created this new swing low. So we can be looking for higher prices here. And that's exactly what follows there. We made a swing low, pushed up, and I can't see a world where those don't get taken. And there it goes. So we actually, looks like we had a gap up, and then we ended up sweeping back down. Is that a new week? Yeah, it looks like that was a long week or something, or a long weekend. So bank holiday, some funky stuff going on there. So I'd be a little bit cautious with this. You don't typically see those big gaps in futures, but we end up pushing down. Let's just adjust this this range here so we can find the equilibrium. And I should just mark these out here. Yeah, we'll leave that one, and we're going to talk about this because we have failed to displace down. This is our swing low, but we are in a discount, so if we're bullish on higher time frames or our drawn liquidity is higher, we would be looking for long opportunities to take out this high off of the discount of the range. And there we go, we're displacing higher off of that and displaced straight through this. And this is 100% a break-in structure here. You can't deny the speed and aggressiveness there. And now you have this as your swing low, but I'm not so sure that that gets pulled back to yet. We'll see. We'll need a swing high first. There's our swing high. And now you take the equilibrium of this range. And if you're still bullish, you're looking for higher prices here. And failing to displace above this high, let's see what happens. There's the displacement above the high, so that's not important. This low is no longer of importance. But we did get this internal sweep here that I missed earlier. But I can see it now in hindsight. Even though this is replay mode, you know, sometimes that happens when you're talking fast and your brain's moving pretty quick here. And so as you can see here, we made this swing low, failed to displace below the swing low, and displaced up, and ultimately that led to this displacement up higher here. And we continued to displace up, making this swing high here. And where does that leave your swing low? Well, your swing low is all the way down here on this liquidity sweep. And then this break of structure obviously occurred, but internal sweep, breaking structure, pushing up. So now we're going to take our EQ of the range. We're expecting at least a pullback into that discount. There's our pullback into the discount, if not lower. And let's see here, still no swing low, still pushing lower. And now we have our swing low. So you have an internal swing low here that is created, and we're looking for displacement or failure to displace. And let's see what happens. Pushing up here, and huge displacement, but no close above. That's not the end all be all, but we are failing to displace. That's what we can take from the wick. So we're failing to displace. We're going to give this one more candle here, and now we have created a new swing high. Right, and this would have been our follow-through candle if we wanted to continue to displace. So we're a little bit bearish here. Now we're displacing down off of a failure to displace. We're definitely looking for lower prices now towards this swing low. And ultimately here, what I would be doing as well is taking this range from swing low to the new swing high that was created. So we've tapped into a discount. If we're going to push higher, this would be the opportunity likely. And look at that. So we made a swing low internally, failed to displace lower. And if we start to get one nice green candle here, we'll take all the way up high probably, yeah. So now I'm looking at this high over here off the failure to displace, and now we're displacing up in the discount of the range. And there's the follow through, the displacement up. And continuation here, still no swing high. Continuing, displacing up higher. There's our new swing high. Mark out the swing high. Mark out the swing low. And find your equilibrium. I hope this is kind of making sense, guys. Now, this is not a perfect science because displacement is subjective and personal to each person. But essentially what you're looking for is fast, aggressive candles, not these wick or indecision candles. Those don't tell you much except for failures. Okay, so this is not displacement, but this would be a failure to displace candle. It's just not in the right position. So like this, although we had a displacement up, we couldn't continue higher off of this candle, ultimately creating a swing high. Failing to displace, we come back into the range. Failing to displace, we push higher. Failed to displace, this is a good failure to displace candle, and we're expecting higher prices. There it goes into discount of the range, breaking structure. Hopefully you guys are kind of getting the point. I know I'm going fast. I just want to try and get this information out to you guys as quick as possible. And I know some of you guys are quick learners. If not, watch this video once or twice, save it, come back to it. There'll be lots more with similar content in the future. I'm going to go on a content grind here, so if you guys want specific videos, drop them in the comment section down below, because I will be reading those and I will be using that information to make videos that you guys need and that you guys want. So this is also to be used with conjunction or confluence in terms of PD arrays. So fair value gaps, order blocks, breaker blocks, volume imbalances, things like that. So although this is a daily chart and you can't necessarily use daily bias, you can definitely use weekly bias, monthly bias, things of that nature to build this out. And it's always top-down analysis, so you start at the high time frames and work your way down. Anyways, this is transferable to all time frames, as time and price are fractal. This isn't necessarily a daily time frame only tool, but it is definitely useful in finding daily bias and expecting the next expansion move or candle, as well as understanding when a break of structure is more likely than a failure to displace or a liquidity sweep. Like you can see here, after you see that failure to displace in this big green candle here, we're coming for the high. Most of the time we're coming for the high, and especially if you can start utilizing, like I had mentioned earlier, these fair value gaps, order blocks, things like that, then it really becomes quite easy to start to identify where we are likely to push and where price is reacting off of. So without further ado, guys, if you do have any questions, like I said, drop them in the comment section down below. Make sure to hit that like button and subscribe if you like this content and you want to see more. And until next time.